for me. You're a great kid.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Yeah, it is Thursday, May 29th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show. A little podcast, you ever a little podcast called The Price of Truth, the show, where we like to explore the incentives that govern our world. And, oh my goodness, a little stop and reverse action for you today. Who likes to play Uno, huh? A little reverse card, a little skip, and then a reverse card thrown down. We live in the banana republic, my friends. More on that in just a bit. Before we get there, let's say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, no, this chat box on your screen, my bad. If you want to be part of that little chat box, there's only one place you can do it, and that's on the evil Google YouTube. So head on over to the YouTube channel, find Tasty Live somewhere, subscribe to the channel, and then your thoughts, both appropriate and otherwise, will start streaming in front of these people. No moderation either. Straight chaser or straight shot, no chaser. But if you talk crazy, we'll have to do something about it. So just come on. Have some sort of sense of self-restraint, you animals. Shout out to everybody in the chat. I'll quickly shout you out. It's been a while since I had the opportunity to do this. We've got all these fancy guests on, and I can't say what's up to the people. Victoria, how are you? Catan, Chaz, Emmett, how are you? Thanks for those very kind words. Theta Trader, how are you? Oh my goodness, Cato Prime, Lone. Did I say your name twice? If I did, go buy a lottery ticket. Nicole, how are you? The whole gang. Osborne, what's up, Gregor? I would say what's up to all of you. But I'm not allowed to. I was reprimanded several times for doing so. But I'm going to get him in there whenever, however I can. Shout out to all of you. Thanks for being with us. Hit the like button if you would so choose. But the most important thing is to, get those metacarpals and phalanges moving on the keyboard. Even bash your face into the keyboard if you have to make random ass characters and spoof the Google algorithm into putting us in front of as many people as possible. I bet you guys, some of you guys can say that open by yourselves. I think if you've come here enough times, you've heard that open like a million times. But shout out to all of you. What a day, huh? Turns out it's not all about NVIDIA earnings after all. What a beautiful setup for an okie doke, They rally them 2%, something like this overnight. That's how you know. Rally them 2%, something like this overnight. You come in, that's interesting. They're only up 1.5% now. Vol futures kind of ticking up a little bit. It was just the perfect okie doke, You get the all clear from NVIDIA, which is totally not, it's not relevant at all. Had a $9 implied moved $6. Ended up only moving $4. And it just had that feeling, It had that perfect setup for a rug pull. And we ended up getting it. Most of the equity majors moved down to basically unch for most of the day. S&P cash ended up around 0.25%. The NASDAQ, though, which is the one I was throwing spears at, ended up 0.1%. The Dow Jones up nearly 1/3, and the Russell up about 1/3%. Those are the cash closes that I'm reading to you. Obviously, sort of the big news of today, at some point in time, the core. I don't want to mess up the labeling of the court system. Yes, the U.S. Court of International Trade earlier today, or it was yesterday actually, the U.S. Court of International Trade found the utilization of the 1977 IEEPA Act to impose tariffs was unconstitutional. So that was the news yesterday, headed into today. And my immediate thought, and I started listening to some of the people in Trump's economic team talk, they said there are other options. And I was like, okay, well, what are those other options? I went and sort of did some digging, and it seems like there are 4 other statutes that they could utilize to impose tariffs. One, they could do almost immediately. It doesn't take sort of an investigation that the other 3 need. But you can only implement tariffs under that statute for 150 days. And the other 3 you could do with some sort of bureaucratic investigations, potentially get something done there. Or obviously you're going to appeal, and the second thing you have available to you is to potentially escalate this. Who knows? Maybe the Supreme Court would take this on. But immediately my thought was, I think the market response, it looked as if the market was showing some sort of relief about this idea that the court system had sort of had deemed these things unconstitutional and effectively gave them 10 days to remove these tariffs. They had 10 days to remove these tariffs. And to me, I thought, this is not, just think about the distribution here. Yesterday, I knew what was going to happen. Maybe I didn't like it. Other people didn't like it. Maybe I did like it. But the point is, I don't know the status of all these trade negotiations, but at least I know the rules and I know the incentive structure that all of these negotiations are taking place under. And I think some people saw the potential for the courts to overrule this, because there are several challenges in the courts. This isn't the only one. And so this change, in my mind, it created way more uncertainty, because you have to ask yourself, okay, how does the administration respond? And I'm like, it's unknown. It's completely unknown. They could go hard in the paint with a new statute, and it could change the incentive structure and the negotiation process. If they go hard in the paint, they could use it possibly as an out to just get out of tariffs altogether. I saw that as a very low probability, but it is a non-zero chance. All of those things, I thought, okay, this is way more uncertainty than I had 24 hours ago. And then I added an additional element to this, which is, if you're in trade negotiations right now, if you're having discussions with the United States, and you're doing this under the premise that the United States has created this leverage with tariffs, and now all of a sudden there is uncertainty as to whether or not that leverage actually exists, would you continue those negotiations in good faith, or would you slow walk them to try to let these things play out in the court? Because ultimately, whatever leverage the U.S. might have had at the beginning of the negotiation, they might not have at the end of the negotiation, which changes the whole structure of the potential deal. So then I thought to myself, well, you're probably going to get a lot of trade negotiations that are going to be slow walked at this point. And that's not necessarily net positive for assets, I don't think. So for all these reasons, yesterday I had the exact opposite impression of what this news would end up meaning for equity markets than what they were doing. And sometimes that just happens, and by the end of the day, so one of the interesting things is the Trump administration had immediately been ready and filed for appeal. So a few hours ago, if I'm not mistaken, it was a few hours ago, the news drops that effectively, I think there was just a stay on the tariffs, that they do not have to remove them within the 10 days. And the appeals court could end up siding with the lower court. I think they're still working. My current understanding is that that has not been decided, but the tariffs do not need to be removed at this point. And I'm thinking to myself, what a wild world. I mean, this is the global economy we're talking about. And you're in the middle of what are probably pretty robust negotiations. And the whole aspect of the leverage in those negotiations is just called out in questions and then reaffirmed in a way, but it's still not, the appellate court could still side with the lower court. To me, again, I don't know how you come out of today and you go, the world is much more certain than it was yesterday. I don't know how you do that. to me, but maybe I'm seeing it a little bit wrong. Let me know how you guys are thinking about the events that took place today and how risk ended up playing out. Let's see. Mark says, I guarantee if this comes down to Trump pressuring Congress to allow taxes, it's a no-go. They're already screwed for the midterms. This was the other thing I thought about. I sort of played this through, Mark. I don't know if I want to do this early in the stream, because I had a conversation with Tom. And one of the things that Tom was thinking, he was leaning, is that Trump would use this as an out and just sort of get out of the whole tariff thing. I think that is an extremely low probability, but I allowed myself to think through what would happen in that scenario. He's got two options. You can either fight or just use it as an out and say, hey, I was blocked, I did my best. And I think if he used it as an out, I'm like, okay, that's like, we'd go to 7,000. We'd go to 7,000 in the S&P. And the administration would pivot into being a cheerleader for the stock market, just the way they were in the first administration and the same way the Biden administration used the stock market as some sort of barometer of the health of the constituency. And I thought to myself, well, then it's only a matter of time before the bottom half of the country figures out. That's what I had last time. I told you I didn't care about stock market at all-time highs. That's why I put you in there. I got a bunch of culture war stuff. There's no new job prospects. In fact, what likely happens is unemployment rises a bit. And by midterms, people, Dems win midterms. They flip. The Congress goes locked. And whatever progress, and I put that in air quotes because some people, his base probably sees things that are happening as progress. Opposition probably see them in a very different light, but I'm talking about this through the base's perspective. They see even less, quote unquote, progress with a locked Congress. And I thought the political pendulum completely swings in 4 years, completely swings the other direction. And I allowed myself to think through, okay, well, now you have probably a pissed off electorate who's tried everything between Obama, Biden, and Trump. They are very clear that they want economic populism. That's what they thought they voted for. And they are, if this, in this line of thinking, that doesn't happen, what would they want? Well, they would look for economic populism on the left. And I don't think they'll get it. I think the Dems, at the exact time that the people would be open to economic populism from the left, I think they're moving towards to the center. I think they'll end up running some governor with low name recognition, with as little amount of baggage as possible. And I just, a lot of this is very related to risk assets, but then I thought, okay, well, what would I buy into that scenario? And a lot of it's like China, probably more war stuff, a lot of tech control type instruments. I think clearly that's not going to be the case. It looks like they're not going to use this as an out. And the results of the appeal are kind of further evidence that that's likely not going to be the case. It's going to be a low probability. But what a wild 24 hours. What an absolutely wild 24 hours. Only thing, Victor, countries won't wait for U.S. tariffs. They are creating their own supply chains. They're creating their own supply chains. You mean, well, we're not necessarily part of the supply chains, though, Catan. We're the end users. We're the end demand for a lot of that stuff. I agree that wherever there is volatility in a supply chain, people are working through that right now, and they're creating redundancies. But that probably works for a lot of businesses and countries that want the U.S. in as the end consumer, right? People are probably diversifying their supply chains out of or away from China to some extent, into Vietnam and other places, Indonesia, stuff like that. I do agree with you. I don't think people are waiting. They're trying to figure out how to remove volatility from supply chains. But I think it's really hard. I think it's really hard to pick a strategy right now. Anyways, vol cash VIX at 1918, futures, front month futures at 2010, vol term structure, lackadaisical, man. Lackadaisical. And the thing about this is I'm not necessarily fearful. It's just it's sort of a risk and reward play. Some part of me, I know we're at 20 and 20 is not really cheap, but relative to what could happen, I don't know. Some part of me wonders whether or not I'm going to say the thing I shouldn't say on this channel, like buying some upside premium here, some volatility is an interesting bet. It somehow seems like the institution of America, it's shaken, man. We're moving too fast, you know? These big institutions, I said this at the very outset, that not only do you have big changes, but you have lots of changes being introduced all at once. And anybody that's managed change through an organization, you can do that when you have really small, fast, and flexible teams, or if you have really efficiently designed organizations and a culture that accepts, allows, and even wants change. And I don't think any of those things are true about the institution we're running here. It's not efficient. It doesn't fully accept or want these changes. And it seems like, man, this thing is shaking at its base. And it's very interesting to me that the volatility is not being, it probably is being expressed. You know, that's probably why I'm looking at $3,300 gold. That's probably why I'm looking at a 1% gain in silver today. That's probably why I'm looking at 106,000 Bitcoin. Interesting move in Bitcoin today, I think. That volatility has probably been expressed and then distributed out into assets. But some part of me thinks vol seems cheap, and that's weird to say when vol's at 20. Am I crazy? Probably. The answer to that's yes. What's up, Donna? Great to see you. Taif says both upside and downside volatility is relatively cheap right now, especially if you're picking specific stocks and sectors. I kind of think that's true. I don't know why I did this today, but for some reason, I did the thing that you probably makes no sense. I went and bought. JD.com was up like 4% today, but it's still cheap relative to itself. Pinduoduo, so like all these Chinese consumption stocks that have been bombed out. For some reason, I wish I had a better thesis. One, I hold both of these already. These things are cheap relative to themselves. So I thought, why not add just a little bit to the position? If we're in a world where this whole tariff thing sort of ratchets up here, which is very possible, this is not going to be a great bet. But I sort of think these things are getting cheap on a relative basis. So I went in there and I bought a little bit of this stuff. Probably going to be a horrible bet, but sometimes you just let price tell you what to do. Chaz says Doge was successful. They dealt swift blows to CFPB, the DOL, the DOE, OSHA, VA, NOAA, airline industry. I can't tell, Chaz, you're being, if there's sarcasm to that, or you're being straightforward, if that's your true opinion. some part of me feels like they got the Social Security data and got out of Dodge. It's like as soon as they got that Social Security data or went in through much protest, they never touched the Pentagon. Elon says, okay, see you, everybody, I'm out. He takes off. Bots explode on Twitter. It's like, he's like, F Twitter, I don't care anymore. F Doge, who cares? We got what I came for. Let's put the Social Security data in our AI. I know that's a crazy conspiracy theory, and I don't think it's true, but some part of me goes, I think that's why Tesla has a higher valuation. Because the market's going, I think you got that data, bro. And I'm going to give you credit for it. That nothing I'm saying is true. There's just aluminum foil, tinfoil hat stuff. But it's not 0%. Bonds at a nice little rally today. Another point added for the good guys. We're at right around 113 here today. The curve's not really moving. Still 51 basis points. And the Fed odds, man, they are just slow walking this. They are slow walking this. But the market not pricing out September yet. Still 81% that you get a cut in September. And still a decent probability that you're going to get a second in December. What's to gain by the Social Security data? Oh, man, Steve. So, okay, here. Let me just say this. If there's a woman named Catherine Fitz, and she has theories about sort of this control grid that these tech titans are after, that they seek to create. And one of the necessary components of this would be the Social Security data is sort of this gold mine of who gets paid what and how is that money dispersed, what's it spent on. And if you were going to create sort of this social credit system, that would be one of the things that you would want to gather and feed to an AI. It's a wild thing that I'm not necessarily advocating, but if you're interested in going down that rabbit hole, her name's Catherine Fitz. It's a very low probability of your liver wake up with marmot standing on your chest and staring at you, but still never zero probability. Jazz, don't take the bait. Thank you, my friend. I'm quite proud of myself for picking up on the fact that was a troll. So yeah, we're up to 113. It is a boring, sloppy trade, but we are moving to the upside. So at least we got that for us. ZT, on the other hand, kind of dead, but if anything, staying in this really tight range, moving slightly to the upside. So he still got this, and notes aren't doing a damn thing, man. Notes are one of the most boring trade on the board. They move like a point. So of all the things in terms of volatility, the back end of the curve is given the most, but it's still not moving that much. I'm still long the back end of the curve. Some part of me after today was like, should I be? if the U.S. court system is slapping down skip and reverse cards this quickly. But I'm still staying long, and it's mostly because it's a hedge against the things that I believe could happen. So I'm staying long the back end of the curve. I'm basically I'm neutral on equities. But really, if you look at what I own, I'm long a bunch of materials, long a bunch of energy, long some China. So I'm long everything except big tech, and I'm short NASDAQ over the top. So even though my my portfolio delta is basically neutral. I think it's like 80 or something. It's almost exactly flat. The stuff I'm long versus the stuff I'm short, I can definitely see a different, if tech stocks come down and other components move higher, there's definitely room for outperformance, and same thing to the other side. How do you play the rest of the week? Today was a really interesting day. Day one or a fluke? Day one or a fluke? Sahil says, what's up, Sahil? You think Trump lashes out with more tariffs over the weekend? More tariffs. I don't know. He would first they would have to come up with a strategy for how they're going to do this legally. So they probably wouldn't do it under the same statutes, under the same sections of the law. So I think they probably want to come up with a new strategy. And I don't think he wants to use tariffs for tariff's sake. I think he's only going to threaten new or more tariffs if a negotiation isn't going well, if it's not moving quick enough, or if from their point of view they're not being offered enough or a quote unquote fair deal. I'm guessing that's probably what those EU tariffs were the other day. That stuff's not going fast enough, it's getting buried, or people aren't coming to the table, and so you threaten that, and then within 24 hours, 48 hours, you suspend them. But it's the stick in a negotiation. So I don't think they'll do it just to do it. I think if they're not getting movement on negotiations, and that's very possible, given what just happened in the court, maybe some people slow walk it, and then he feels he has to use a stick to move these conversations along. I think that's possible. I think it's impossible to predict, though, Sahil. I think it's a losing game to try to try to guess when or if he's going to do that. I think we just trade the numbers. If the number is cheap, we buy it. If the number is expensive, we sell it. And then at some level, that's what these guys are doing too, If they feel like they're playing with house money, in other words, assets are inflated a little bit, I think they take more liberties. If yields aren't sort of on this 5% borderline of making it really difficult to finance $7 to $9 trillion in new debt, then they take more liberties. If they feel like they don't have that premium, they feel like they're at a discount, they probably take less liberties. They say more dovish statements, to help get them back closer to neutral. I think that's what they're doing. So I think we do the same thing. Quick look at the yield curve, man. Just absolutely wild. As a quick reminder, the red is where we started in last September when they made those first cuts, the 50 basis point jumbo cut. The green line then is the second cut, the 25 basis point November cut. That's what the yield curve look like. We're effectively inverted to start this whole thing. Start to flatten out. Blue is where we were with the last cut in December when they stopped their cutting cycle. And now that yellow line is where we are at now. So we've now got the long end of the curve higher than where we were during that period of cutting. So you had the long end that was lifting throughout those cuts. The short end is now dropping, but the long end is lifting at the same time to 5% yields in the long end. And at one point, that was just like the danger zone, right? Now the market's getting used to it. People calling for 6% yields at some point in the near future. Can you imagine? When do you think these people trying to sell their homes? It's like everybody's playing this extended pretend game. Literally everybody's just going in the market. If you're selling something, you're like, the buyers are not showing up. There's more inventory being put out there, but nobody wants to change the price because they're all waiting for these cuts. And they think as soon as I get a cut, mortgage rates come down, buyers will show up, I can get my price. That must be what these people are thinking. You know, you got this little run up in the home builders up to like 102, half, something like this. And XHB, ITB, the chart looks the exact same. More leveraged ones would be like KB Homes, Pulte Homes, DHI. All this stuff is on the floor. God, so tempting. The problem is only in 1 year charts do these things look good. God, just crack the damn housing market. I wish, just crack it. And even if they cut, right? If they cut too early, the long end is going to lift. That's the wild thing. If they cut too early and the market doesn't think we're in sort of like this neutral period or potentially on the cusp of a growth slowdown, why wouldn't the long end lift again? And you're going to put even more pressure on the housing market, which is the funniest thing, that all these people are sitting around waiting for cuts. And if they end up getting it at the wrong time, they're going to be in a worse position. Borrowing costs are going to get even higher. And they would have waited all that time for nothing. And some part of me kind of wants that outcome, so we can just get this over with. You know, what are they going to cut? Just wait until they know they're too late. Unemployment ticks up. But by then, labor is the last thing to change. You know, labor is the most lagging indicator. So if they're waiting for the unemployment rate to hit 4.4% or 4.5%, whatever their new target is, how are they not way behind by the time that shows up? That there's a risk that they're behind. So we're just waiting for unemployment to get to 4.5%. Then we get to 4.5%. Then you get your cut. And the hope is what? That at that point, long end yields will stay stable, if not drop, with the cut, because likely the Fed is slightly behind and they're not ahead. That's the whole magic here, I guess. I don't know. Everything in Massachusetts sells right away and price keeps going up, says Misdemeanor. The places in like Austin, all those hot markets, where it seems there's a bit of an oversupply. I bought DHI Home Builder and Deck 2 days before Trump announced tariffs in February. They have never recovered. Sad but true. Horrible timing. Before tariffs. Announced tariffs in February? What do you... Donna, you knew he was going to do tariffs. Everybody knew he was going to do tariffs. And you mean in April? Yeah, so this is the thing. When you look at a lot of these home builders on a longer time frame, they're still not cheap relative to themselves on a price-only basis. I know I'm not talking valuation here. But I really, I think I would like to buy some of this stuff. Some part of me goes, well, what's the turning point in the cycle that would create an environment for these guys to build again? I don't know what that thing is, but I don't think I need to know necessarily, you know? I just need them to get cheap enough where I'm getting a decent enough discount to buy these things. And it's almost tough to short at this point. You know, we were talking about these home builders. That's really interesting misdemeanor. We were talking about these home builders here in September as a short candidate. And now we're like, what, $30, $40 down. It's hard to short the whole at this point. Now we're just looking for an entry, or at least I'm looking for an entry opportunity. NASDAQ getting a bit weaker here, down 1/3%. Interesting, dollar got a little stronger here today. A bit. And gold moved a bit higher. Silver finally did a little bit to the upside, and I've increased my exposure in silver. So I had basically some long calls and long call spreads, and I let some of those, I let one of them get assigned because it was in the money. And so now I'm just wearing some long silver futures alongside of those calls. So a 1% update was helpful, but come on, let's get going above 34. After the events of today, I don't know. I don't know if I think it's more likely or less likely, honestly. There's a part of me that thinks, yeah, I don't like, there's a part of me that thinks this thing is shaken. And so that would mean you run even more so to metals as sort of a hedge. And I think that's why you saw gold to the upside. But I don't know that these are the conditions where silver then also performs. I get why gold would work here. I'm maybe not as confident about silver, but I'm going to stay on the trade. You know? I'm going to stay with it. We'll see what happens. This thing's going to take me down. I'm almost certain this thing's going to take me down. There is no way you can talk about a trade this much and sort of make it a part of your short-term identity and it works out for you. There is almost no probability that that happens, but let's see. Let's see if we can break up above 34. And then the weird little sell-off here in Bitcoin. That's a ugly little break. Weird little sell-off. I sort of understand the risk-off sentiment in the market, stronger dollar, bonds higher, gold higher. I suppose I can understand volatility up slightly. I suppose I can make a case for that. I wouldn't be buying here. I'm not selling the trading position. I still have it. But I don't know. Maybe it is time to let that thing go. Should we ride it? Target was what? 125? I still everything they're doing, man, is they're just shaking the core of this institution. And I don't get how you don't go looking for some sort of protection here. And here's the thing. Let's say the first thing I thought when that ruling came out yesterday, not the first thing, it was the second thing. The second thing I thought was, well, as little as those tariffs could bring in, which I don't know what you guys think, or if you've done any analysis as to what tariffs end up bringing in. But I think I had it like I can't remember the number anymore, but it was like at best case scenario, it was something like 700 billion, something like that, like best possible case scenario. I think I might be off there, but I think that was somewhere in the ballpark. So then I'm like, okay, so you mean whatever revenue that was going to take in, that's now gone too? So you didn't get any money out of Doge. You're not going to get any money out of tariffs. And we're halfway through passing this big, beautiful bill with tax cuts and tons of spending. Like, the first thing I thought was like, well, isn't that more bullish? Isn't that more bullish for like gold and Bitcoin if that ends up being the case? You know, even more deficit spending, basically. Am I thinking about that right? And by the way, I don't think it'll be 700 billion. But like that, I think I did some quick back of the napkin math where I said, what was 2024 tariff revenue? And then I take that times 5. And then I added some percentage onto that. I think that's the way I got to that number. Or I think I said, what was 2024 revenue? Maybe I increased it by 5% and I multiplied it by 5. Like some stupid easy math just to say, like, we had 2% tariffs, now it's 5. Or excuse me, we had 2, now it's 10. So I 5x'd it. So it could be more, but I think I had 700 billion. Emmett Morrison says around 500 billion. Yeah, so at least I think I'm in the ballpark. Chaz says, I agree with you. Breaking Point was speaking about the Anthropic CEO saying how the AI giants are 3 to 5 years away from decimating 20% of the jobs. I saw that video. I didn't watch it yet. But Mike Green said something on Twitter as well, and I really respect his point of view. But he effectively said something as well, that the engineer jobs are on the verge of collapsing. And I think he did it in response to somebody who was talking about there are engineers that are working on products for a zero engineer world. So he was responding to that tweet and effectively saying that, yes, the male-dominated engineering white-collar jobs for high IQ individuals are under imminent threat. I think that's true. You know what's interesting? Maybe not interesting. What's interesting to me is it's so clear to me that we have these really, really big problems in front of us. And, you know, I remember reading in like maybe my 4th, 5th, or 6th grade history classes, you know, about previous bouts of U.S. history and how there were times when the American people, where we had large periods of immigration and kind of like difficulty in social cohesion, and there was sort of this nativist response versus sort of the immigrants several times over history, you know. And you almost think to yourself as you're reading this stuff, well, we are a more evolved species, right? We're a more evolved version of our previous selves. And that's not the right way to think about it. The right way to think about it is we are, you know, humans are creatures of habit. We just do the same thing over and over and over. It just takes a few generations for us to forget the lessons of the previous generation, and then we just do the same exact things. And, you know, we're in this moment right now where I think a lot of the oxygen in the room, it's all dedicated towards very low vibration stuff. You know, it's very, very like stuff I've read in 4th grade history books. It's the immigrants and we need to get these people out, or these people are threatening us. You know, we have to maintain our place of dominance in the world. And it's working, you know, it's working. It's working as a method of distraction. And I'm looking around going, we are not talking about what is going on in the labor market. We're not talking about how that sets up we're not at all talking about $80 trillion of unfunded liabilities in Social Security and Medicare. We're not even having the discussion with any meaningful dialogue or at high enough levels of leadership. We are not talking about the plummeting birth rates, both here in our country and across the world. Like, our life expectancy is on a downward trajectory. And no, it's not just sort of this COVID blip. It's a trend. Our life expectancy is trending lower. We have these really big sort of societal problems. We could talk about education. We could talk about the impact of very addictive technology that has exploded and is being given to children as sort of this companionship mechanism, and it's changing the way their brains are developing. It's changing their ability to focus in later years in life. Like, we have these very large problems, and sometimes I get a bit disappointed, man, that like the things that I see being discussed at our highest levels of leadership, they're not those things. And the things that I see citizens concern themselves with are not these things. And so when none of us are there to have those conversations, the shortage of housing, thank you. That's another one. You know, we're 4 million houses short, and nobody's talking about that. I could go on with a laundry list of really big societal level problems. There's no truth and reconciliation about what just happened in March of 2020 and for a year after. Why is that not a thing? You know, don't you want to know? Don't you want, like, why do we keep having these big events in our lives and nobody is held accountable for the decisions that they make? It didn't happen with the great financial crisis. It didn't happen with the pandemic. Like, these gigantic events happen in our lives. And it seems like there is just zero accountability across the board. There's no truth and reconciliation. There's no look back. We just keep moving. And then some people are able to convince others. I think I just lost a bunch of people. We're able to convince others that, like, this is the political line. I'm looking forward. I'm not looking backwards. No, man, that doesn't work. You went to Dartmouth, and you didn't know that 80-year-old man did not have his mental faculties. Where I'm sitting at home with no pants on, eating popcorn on my couch, and I can tell what's going on. And you know what I mean? Like, why is there zero accountability on so many aspects of our society right now? I just don't get it. And I think a lot of it is like, we're not demanding it. You know, we don't demand it. We're so caught up in these things that really, in my personal opinion, like, they do not matter at all. And they're so effective at this division strategy and this distraction mechanism that's so effective. You know, and that's a bit, I think that leads to a world of apathy. And I'm very concerned about that. I think we're already seeing it. I'm very concerned about a world where people just give up trying to have a positive impact or trying to utilize the political system for positive change in their personal circumstances. That's my biggest worry in 4 years. I guess, 3.5 now? My biggest worry is apathy followed by ire. You know, I think neither of those two things are good. And I don't see how in 3.5 years that one of those two is going to be the outcome. You're going to have a completely apathetic constituency, or you're going to have a pissed off constituency. And I don't see how there's any room for some glide path in the middle. And a lot of that has to do, you make big promises, man. You make promises to the working class, gigantic promises. You make promises to the Maha moms. You make promises to the fiscal conservatives. you make these you write these gigantic checks, and then the only people you cash those checks to are the donor class. I'm worried about that world. I'm worried about the reaction to that. I'm not giving up faith that there's an opportunity here, but the incentive structure, I mean, this was always going to be a wild gamble. And I don't know. For those, what would you assign the probability of success? Promises made versus promises kept in the next 3.5 years. Of what would you assign the probabilities? And try to do it in good faith. What would you give it? A 5 delta, 20 delta, 30 delta, 60 delta? Where are you? That this attempt, and this is a big gamble, to change the debt trajectory, to change the employment opportunities, to change real wages, to change prices, to change these gigantic problems, that it has a positive outcome. Trade negotiation, all at once. What do you think the delta is of success? And try to be as objective as possible. If you're for or against what's happening right now, try to be objective. I'm really curious what you guys have to say. Gregor says, nothing new to see here, Victor. Trade the increased vol. Couldn't agree with you more. Oh, you guys are, you know, you're all at my price. That's wild. I think I'm optimistic too. I think mine is probably 30. I would have said 30. And I know I'm being optimistic. Isn't that wild, man? Trade deficit is not an emergency. The debt and service is more of an emergency. I guess, Lincoln, there's a way to see those things as the same, not the same, interrelated. It's a box spread, no delta. That's funny. That's wild. We're all in the same ballpark. And the funny thing is, I'm not asking your affiliations. So that's people that don't like what's happening, and that's people that voted for what's happening. And the funny thing is we all got the same price. That's absolutely insane. Quick look at the sectors for the day. And I want to talk about some data here in just a second. But real estate, ironically, up off the mat 1%. And bonds rallying 1 point in the long end will do that for you. Energy up 0.75%. Utilities, the only sector that was underwater officially was communications, even though discretionary up only up 6 basis points. I saw Josh Brown say something about Nike today, and yeah, I think his quote was, I didn't read the whole article, but his quote was, I don't know if they can turn this thing around. I don't know if they can ever turn this thing around, I think was his official quote. And almost instantly, and this is no shade to Josh, but almost instantly I was like, let me go look at this thing. You know, because when people make those types of statements, Josh really good. He knows how to make statements that people are going to listen to, as he's really polished media person. But I thought, how cheap did this thing get? It's not super cheap, $60 relative to itself. Is anyone out there on the Nike train? Almost instantly, I thought to myself, I think I know how to fix this company. Just stop selling mass market products. Change your brand. Sell to the people who are going to be buying flying cars in 10 years. This whole barefoot shoe movement, this is totally, don't trade on this. This is just a crazy thought I had. People are buying basically socks. They're socks with a little bit of padding on the bottom and this barefoot shoe movement, and they're paying $200 or $300 a pair for these things. And Nike's nowhere to be found in that market. It's all Vivo barefoot, Zero shoes, handful of other premiums. And I'm like, that's where you got to go. Charge 3 times as much for your stuff and sell it to a different audience. Get out of the mass market. That's effectively what everybody's got to do. If you're a teacher, it's hard to be a public school teacher. So what do? You go teach rich people's kids, and you get paid a fair living wage. That's the tough thing about where we are right now with the K economy. That's the real sad thing, is that people are going to sort of, you got to make a choice. Lots of people have to make a choice. Josh Brown is too emotional for investing, says Tom. I don't think so. I think I've talked to Josh once or twice. He's always been nice to me. We've had a few times where we shared the screen together. I think he knows good TV, and I don't think you can be on TV every day giving sort of this rational analysis of the distribution curve. I don't think that's why people tune in to CNBC or Bloomberg, maybe more so Bloomberg. So I think he knows what the audience wants, and I think he gives it to them. I think his actual long form podcast, I think, is much different than what he does on TV. I think his blogs are much different than the podcast and what he does on TV. And I think his actual investing is much different than the feeling you get from the blogs and the podcast and on TV. So I don't know. There's a game and you got to play it. Like when I've gone, shoes overrated. When I've gone on those programs, I've given them my notes. And so what happens is they ask you for any notes, and I hate doing that. I write just like a handful of words now. So they almost get nothing, because if you give them exactly sort of what you're thinking, the anchors will steal it in their question, because anchors don't have a lot of time and they got a bunch of people coming on. So right before in the break, they read the next guest, all their talking points, and then they have a question that basically uses the most interesting parts of their talking points. So for that reason, I don't want to give it to them, but also it's like, just ask me questions. I'm not going to come on and give a performance. Just ask me whatever and I'll answer it in real time. I don't need to plan my whole thing. You're asking me to come on, so what questions you want to ask, I'll answer them. But anyways, there's been a few times where I would give some notes and they would say, we need something controversial. We need some controversial points of view or some contrarian thoughts, something like this. And, I was probably at the time too experienced to do something like that. But I could totally see somebody else going, because I trade, I'm not going to make something up. I'm going to be honest about my thoughts, and I'm not just going to make up an opinion so that it's good TV, because I got to wear that, I said that on national television to millions of people. I'm not going to wear that so you can have better television. But I could totally see that happening all the time, Somebody giving some mundane thing, and then a producer says, hey, let's spice this up. And then they go, okay. They throw in some ridiculous, gold's going to 4,000. They put you deer in a headline on television, national TV. They get you to say it. Now they got their headline. The way the sausage works is wild. And then it goes out, and then some person who's really young, just starting their investing journey, they see some article in some clip from some person that appears to be credible, saying this wild, bombastic, or giving a direct number that some asset's going to hit. And they go out and they use their hard-earned money to make a financial decision. I've been at all parts of that, right? I've been on the side, the brokerage firm side, where I've answered the call with somebody's calling up and say, I saw this on TV and I want to do this. And I've been the one speaking on TV. and everywhere in between that process. And I think more people that are involved in financial media should have to start in some sort of service to the customer. Like they should have to come from the brokerage world or something like this, so that they have a healthy respect for what they're dealing with. Like we're not making good TV here. People are putting their hopes and their dreams, their vacation plans, their wedding money, and depending on how you say something, depending on how convincing you are and how confident you seem about your view in the future, you can impact somebody to make a decision that they wouldn't have otherwise. And you'll never know it. You'll never know that person. You'll never see them. But you have to have a healthy respect for that very real impact. But if you're in it for yourself, a lot of these people, if you don't have a healthy respect for the customer, a lot of these people do, mind you. They're very responsible in what they say. But others maybe feed into the emotional aspect of content creation. And I think I've seen some of the people that get negatively impacted by that, man. And it's not cool. So I wish everyone would, at some point that worked in financial media, they had to work in service of the customer in order to get anywhere close to somebody that's making content for the investing public. But those places have rules where you can't even trade. Can you imagine? Can you imagine being an anchor for Lifetime on financial news? Meaning you could never push the button one time because of the compliance and conflict of interest. And I do understand you can have a conflict of interest. But imagine having that position for decades and you've never pushed the button, but still having that level of influence. That's wild. That's really wild when you think about it. All right, let's keep cruising here. I don't think there's nothing exciting about Nike, I can hear my baby girl in the background. There's nothing exciting about Nike, I think, in the immediate short term. So I don't think I can play it. I'm not really a consumer discretionary person. That's never been my gig. I don't really know that space at all. But it is relatively cheap. I don't think I can make that play. At Victor, genuine question from Taif. Donoski says Josh Brown's a registered investment advisor. He manages money. Yeah. He pushed the button for real, man. He's a real deal. People give him, I think some people, give him a hard time. I think most people, I think, really appreciate what he has to say, and I'm in the latter camp. I really appreciate his perspective. Genuine question. How is it that any different from the system we have where insiders get to sell shares options at high prices while come out on CNBC and talk promising future of a company? I don't think that's very different. I don't think that's different at all. Yeah, I don't think that's different. The thing is, and I don't know how to solve this problem, but if you've been watching this long enough, right? Nobody knows. And so when nobody knows, you're just listening to hear how other people think. And in no way, shape, it doesn't matter who it is. If it's Bill Ackman or somebody I've never heard of before, if I hear him talking, I'll sort of know, oh, this person had an interesting perspective. That was really interesting. Or that person read a bunch of articles and collated them or used ChatGPT to put that stuff together. You know it. You know it when you hear it. So if I hear a Paul Tudor Jones or a Bill Ackman or Stanley Druckenmiller I'm not listening, or even like a Warren Buffett, I'm not listening to them for investment advice. I just want to hear how different players in the game, what they're saying, and then I also want to understand their incentive structure. There's been so many times where Bill Ackman is getting on TV, he's doing this, he's saying the exact opposite of what he's doing in real life, or Chamath. So I think recognizing the incentive structures that people have. I think I said this when I launched the show. I don't care what people say. I care what their incentive structures are. If you tell me their incentive structures, I'll know how to frame what they're telling me. But if I know your words and I don't really get your game, who's paying you, how you get paid, what your position is, like, then I'm wary at all times, 100%. So in some ways, when Chamath was doing the whole SPAC thing, it was an interesting thing that retail investors were interested in, but I wasn't hawking those things. I'm like, this is a pool of cash that's appreciating. Meanwhile, the actual U.S. dollar, I think, was doing it's like, if I invest in the U.S. dollar, it's doing this thing. But if I invest in a pool of money that's managed by this person and it's all U.S. dollars, somehow that has a different return profile because of the potential. It didn't make sense to me. If things don't make sense to me, I avoid it. Yeah, but man, I like to, and I hope, what I love about this place is nobody gets on the air, to my knowledge, and pretends like they know. This place has a way of keeping you honest. I think that starts with Tom. He sets the culture, and nobody pretends. And that's a really cool, it's a special thing. It really is a special thing to work at a place, because everywhere else people are trying to prove how much they know. They're trying to prove how great their credentials are and how rich they are and all this other stuff. And I think that gets new people chasing the wrong thing. It gets them chasing survivorship bias. That gets them chasing, appeals to authority. That gets them chasing all these, like, recency bias, all this, like, cognitive trash that they'll, at some point, either the market will break them of. If they end up being successful, they'll break themselves of all of that stuff, and they'll have to unlearn it and then come around to this way of thinking about the world that nobody knows, and that we as people tell ourselves stories, and the game is not necessarily about understanding the story of today. It's about forecasting the bullshit story that most people are going to tell themselves tomorrow. It's about forecasting tomorrow's narrative fallacy, in a way. And to learn that up front versus go through the pain of thinking, I got to find the person who knows, paying for the option courses and paying for the newsletters and paying for all that stuff. That's a heartbreaking way to then, it's because at some point you're going to get let down. And then you come around. Sorry, I went off on a tangent there. My apologies. Howard Marks will almost never give you tradable information over 10 pages of one of his memos, but you always gain it. That's 100% right. Go watch a Howard Marks interview. It's the perfect example of somebody saying, I don't know, nobody knows. I don't know, nobody knows. But then working through his thought process, but it always comes back to, I don't know. Every one of his interviews. And they're some of my favorite to listen to. I've never enjoyed listening to a person say, I don't know, more than I enjoy listening to Howard Marks say it. Real quick, it is Thursday, so it's going to be our Synthetic Friday here. So you're going to get a couple more squawkers here on Friday. I have not been listening to those guys at all this week. I do not think they can provide any value. They're all saying the same thing. in that last Fed meeting, Jerome Powell effectively said, I don't know, for like an hour. That's all he did. He said, I don't know. We don't know. We'll see. Wait and see. I don't know. And so that's all these people are going on. They're just reinforcing a message that I don't know. Wait and see. We'll see. We have the tools. They're not saying anything. So, I don't think it's particularly helpful. Consumer sentiment tomorrow. This is a big thing, I think, in Ilya's world. Not for me so much. I see periods in time where consumer sentiment is not great, but it doesn't matter. People keep spending, putting it on credit cards. I see periods of time when consumer I know it's a different version of consumer confidence, not consumer sentiment, but like the whole world was ending in April, and consumer confidence comes out, and it blows everybody's expectations away. So I don't put much behind this. Who knows? It could be a catalyst. It may not, but I'm not personally checking for it. I think the personal income and outlays for my money is going to be the most interesting data tomorrow. You see what the people are getting paid, the growth in that payment. Last month, it was 0.5% growth in personal income. This month, it's expected to drop to 0.3%. We'll get another look at the PC. We'll get a look at PCE, which is the Fed's preferred gauge for measuring inflation. I don't really think this is an inflation story anymore. I suppose it's going to have an impact on bonds, but I don't know why. And I just may have the total wrong. I might be looking at this completely wrong, because I see some smart people who have said they think that we've bottomed in inflation and will continue to move higher from here. I don't see it. I don't see it. But we'll see. So PCE tomorrow, month over month, 0.1%, which would be a slight increase from the flat line from last month, and then year over year, 2.1%. Consensus versus the 2.3% we had prior. And I'll take a quick look at inflation now. So this is the Cleveland Fed's inflation nowcast. So these would be the most up-to-date models. PCE at 0.19%, month over month. Core PCE at 0.2%, which would put PCE year over year 2.23%, and core PCE at 2.6. That would be a little bit hotter than what they have over here. We shall see. Cool number keeps bonds pumping. I'm going to keep betting cool. Let's see here. Lynn Alden is an interesting read, especially with how she frames cryptocurrency. Yeah, she's got a book called Broken Money. It's a good book. Misdemeanor says, I love the no spin of Tasty. I enjoy it too, man. It's super refreshing. USA Supertech says, initially it was hard to think the Tasty way because I'm an old dog, but I came around and finally see consistency in the right direction. Awesome. Good for you, man. Good for you. All right. We're here specifically for your tangents. Don't apologize. I don't know if that's good or bad. I don't know if that's good or bad. Nuclear stocks got a little cheaper today. Not cheap enough for an incremental dollar, but at least we're not top of the mountain right now. We cannot break through 62. We cannot break through 62 in CCJ. If we double top here, maybe it's time to collar this thing. What do you think? Maybe it's time to collar this and protect some of those profits. We just made a sick run, back it up at all-time highs. SMR doing the same thing. These are still my favorite plays. All these charts are the exact same. All these nuclear charts are at the exact same point. Double top highs. Same thing with uranium. These charts all look exactly the same. All the growth metals are in the toilet. Silver, copper. That doesn't make sense. Am I crazy, or does Freeport McMoran look like the same setup that we had in Newmont Mining, where we had the underlying, the base, the metal, gold was nearing all-time highs, but the miner itself was at a super discount relative to the move in gold. And it's been the same thing here in copper. I know 466 is that's a ways away from 541. Maybe I'm thinking about this incorrectly, but Freeport, it's like 70% of the revenue comes from copper. That seems cheap. I feel like the Victor Jones reading list would be somewhat different than the Tasty reading list. Probably. I think Ilya and I have read a lot of the very similar things. When it comes to markets, he probably has a reading list that's most closely aligned to mine with regards to markets. I read almost zero fiction. I have always hated fiction since I was a young kid. I think I grew up reading like Goosebumps books by R.L. Stine, and I think that was the last piece of fiction I ever read. I think at a certain age I go, if I'm going to spend the time to do this, I want to learn something. So I do not own any fiction. I own a lot of books on poker and blackjack, and alternative views on history. A lot of books on previous labor movements. The handful of books on Jefferson and Hamilton. A lot of stuff on the civil rights movement. I don't know. You know what I haven't gotten into? I haven't gotten into deep reading on on wars. That's kind of my next thing, I think. You know, I think I don't have the depth of understanding on war that I would like. So I think that's probably where I go next, maybe over the next 5 years. Gregor says, oh my God, Throwback Thursday, goosebumps. Yep. All right, everybody. I guess I'll leave you with this. Where do I lean going into tomorrow? I'm going to stay flat. I don't think I can get hurt bad to the upside tomorrow. So I'm going to stay flat. I'm really looking to buy in my hedges. I would love them to give me a decent price to buy in my hedges. And I'm guessing there's a lot of people out there like me. And I'm guessing that's the reason why I'm not going to get an opportunity to buy them at a decent price. But I'm going to hold them. I haven't pitched them. So I'm holding them. And let's see here. I'm long bonds still, long Bitcoin still, long the dollar against the euro still. I'm long silver. And those are the biggest aspects of the portfolio outside of the stocks I talk about every single day. And I'm holding it. If they give me a deep enough discount, I'll look to buy in those short NASDAQ hedges. I don't think it's going to come tomorrow, but I'd rather be short than long here. Famous last words. I don't really want to be short. I'd rather be flat than long here. Put it that way. And some part of me wonders, I just picked up more JD.com and I just picked up more Pinduoduo. Because could there be a better, like if you were going to get a discount on a stock, would there be a better time to buy a Chinese retailer than in the midst of a global trade war when we have basically embargoed that company? We've made those products almost too expensive to sell here. We've also taken off a lot of their exemptions for shipping. It could get much cheaper. It could get worse in the future. But if you were going to start accumulating a position or add to a position, wouldn't that be the time? Wouldn't that be when the expectations about the future are most bleak and therefore the price is most discounted? That was my thinking. So I started to add some stuff there. I'll probably live to regret that. But that's my story. I'm sticking to it. Synthetic Friday. I look forward to seeing you Sunday. We're back on for Sunday, I believe. So I'll see you guys Sunday for first call, 5 p.m. Central Time, or 4:55 technically. We'll see you then if you can make it. Otherwise, I'll see you back here on Monday, same time, same place, same great network, only on Tasty Live. Until then, peace.